Good evening to all the viewers. Today we have with us CA Sarwan and CA Jignesh, who is going to discuss the recent amendments. There is an amendment with whatever is amendment done. We are going to discuss which is already implemented, and few amendments we all know that has been come by the finance bill. It must be now converted as an act. Is going to be notified, at least it will take 6 months time. So we will notify, once it is notified, then only we will discuss. So we are not going to touch upon the amendment through the act as per GST Act. Only we are going to discuss the circulars which is came after the last program and the amendment in the rules like GSTR 1A has been newly introduced. So this type of amendments we are going to discuss. We have invited two faculties, as you can see, CA Sarvanji and CA Jigneshji. And we also have with us our Vice Chairman, CA Rajendra Kumar P. From Chennai. And I am requesting right now to Rajendra ji to give his address and as well as welcome the faculties for this program.
Thank you, very esteemed Chairman of the GST and Indirect Taxes Committee, CA Sushil Kumarji Goyal, the Honorable Central Council Member from the Eastern Region. Very esteemed speakers whom we see on the screen, CA Jignesh Kansaraji and CA Shravan Gehlotji. The Secretary to the GST and Indirect Taxes Committee, CA Smita Mishraji. The Coordinator from the committee, Madam Impreet Kaur. The technical support group headed by Ashok, who is here. And all the 700 plus participants who have logged in. Hearty welcome to each and every one of you. We have with us two very esteemed faculties. The GST and Indirect Taxes Committee, week on week, comes out with knowledge sessions. In fact, it would not be out of place to say that since 2017, from the moment the GST was introduced, we have been extremely active. But let me tell you, esteemed friends, that from the day the thought process of GST was introduced, our committee has been extremely active. On this day today, we are going to discuss certain important topics. These two faculties will take us through. Kansaraji has a very wide experience of more than a decade as a chartered accountant in practice. He specializes in the field of indirect taxes. I have known him in the past. I have known the ethical practices which he does. And also a person who has a deep-rooted interest in the subject. Practicing from out of Mumbai, Kansaraji's specialization includes not only GST but also in the other areas of taxation. And he brings with us an expertise which will help and benefit all of us today. Shravan Gehlot, who is there before us, he qualified very recently and he had a stint with the PricewaterhouseCoopers, a Big Four firm, for a few years, and then decided that it's good for him that he must jump into the world of practice and also ensure that he spends his time for these type of sessions, which he could not have done in the past. He's been very active in the GST and Indirect Taxes Committee. He's been there with us for quite some time. Like Kansaraji, he's also spending more of his time whenever we require. He's available for every work of this committee. Now, this work of the committee adds value to both of them and also adds value to us. Esteemed friends, we look forward to your suggestions. We look forward to your remarks, your comments as to what are all the topics we can take forward in the coming days ahead. We also request you to please get in touch with the committee and ensure that you participate. Before signing off here now, I would like to inform you that we are having a national conference on GST in Chennai on the August 30th and 31st. Very esteemed faculties will be coming and speaking at the conference and sharing their views. Extremely important topics will be discussed there. You'll find the details of the conference in our GST website. I request you to please register in large numbers and ensure that this is only a physical conference. It's not going to be virtual. This only physical conference. You take home whatever the expert faculties are going to offer for 2 days. We from the GST and Indirect Taxes Committee, under the leadership of CA Sushil Kumarji Goyal, are leaving no stone unturned to address the needs of the members, to address the needs of the government, to address the needs of all the stakeholders. Thank you very much, Chairman Sir, for leading us from the front. And thank you for this opportunity today, which is golden. Thank you very much. Chairman Sir.
Yes, sir. Now over to faculties. Who is speaking first? I think they have decided. Jignesh ji is going to speak first. Yes, Jignesh ji. So over to Jignesh ji for the his delivery.
Thank you, Chairman Sir, Mr. Goyal, Vice Chairman Rajendra Sir, my co-speaker Shravanji Gehlot, Smita Madam, Impreet Madam, technical team, other committee members of IDT, and participants. Thank you for having me here. It is indeed an opportunity to read through rules again and again and update our knowledge. In fact, let me confess, when notification number 12 was published, we have gone through this notification as a routine practice. Today, when I am reading this again, I realized there are 2-3 issues which I have missed. I am sure members must have gone through this notification, but still there will be some learning from this presentation. I will try to keep my presentation as brief as possible. I will be having around 45 minutes to take you through recent changes through GST notification. I will cover notification number 12 to 16, and my co-speaker Shravanji will take us through relevant circulars. So let me share my screen first. Whether my screen is visible? I am audible also properly? Yeah. So friends, for some strategic reason, I will start with notification number 16, which was promulgated on 6th August 2024. This was published on 6th August. Now, friend, as such, this is very small notification. It says Section 11 to 13 of Finance Act 2024 shall be made applicable from certain dates. Section 11 and 12 of Finance Act will be applicable from 1st April 2025. And Section 13 will be applicable from 1st October 2024. Now, friends, we know in every Finance Act, Section 1 deals with when these modifications or amendments will be made applicable. This time there is no controversy. Section 11, 12 will be applicable from 1st April. Section 13 will be applicable from 1st October. Now let us understand what is Section 11 and 12 of Finance Act 2024. Mind well, I am referring 11 and 12 of Finance Act 2024. Now friends, these are one of the major change. And this deals with ISD. Friends, ISD is not a new concept. We have seen this concept in service tax era also. Definition of ISD is prescribed in section 2 subsection 61. On your left hand side, there is a definition which is applicable as of now, and right hand side of table contains definition which will be applicable from 1st April 2025. Now friends, if you see, certain texts are underlined, and these texts are very much relevant to understand what are the changes brought in through this amendment. As you can see, there are reference to section 9.3 and 9.4, which was not there earlier. And we all know section 9.3 and 9.4 of the Act deals with reverse charge. Further, definition is now crystal clear, and we will discuss these changes along with clause 12 of Finance Act because both are related. So allow me to go through clause 12 also. Now, clause 12 of Finance Act will also be applicable from 1st April 2025. And since 7 years, there is a dispute whether ISD is mandatory or not. Whether ISD can we replace ISD through cross charge? There are controversial advance rulings. FAQ says ISD is not mandatory. In 50th GST Council meeting, as well as in Circular 199, it was informed that as such ISD is mandatory, but this will be mandatory from date to be notified. It means as of now it is voluntary. I may choose to comply with provision of ISD as of now, but from 1st April, if taxpayer has presence in more than one state, and if there is some common ITC, then ISD is compulsory. And to make this change, section 20 of the CGST Act has been replaced. On your screen, I will read out this definition or this section. Believe me, friends, this change or this section 20 subsection 1, read with section 261, will be a major change in GST compliance. Any office of supplier of goods or service or both, which receives tax invoice towards receipt of input services, including invoices in respect of services liable under 9.3 or 9.4, for or on behalf of distinct person referred in section 25, shall be required to be registered as ISD under clause 7 of section 24 and shall distribute ITC in respect of invoices. This is what section says. Now let us try to understand let us try to vivisect this section. Who is covered? Answer is very simple. Any office, forget office for the time being, any supplier of goods or service or both which receives tax invoice towards receipts of input service. So any supplier, he can be supplier of goods or service, but he should have received tax invoice in respect of receipt of input services only. ISD mechanism is not applicable for goods. So if taxpayer is getting covered in this, then he will be covered by ISD. Is there any new addition in this definition? Answer is yes. As you can see, section 9.3 and 9.4 reference has been added. In earlier part or in present part, there is no reference to section 9.3 and 9.4. In fact, today, as of now, we are not distributing reverse charge credit through ISD. But going forward, we'll have to even cover ITC on reverse charge. Now, if you read this definition of ISD, friends, one key criteria is for or on behalf of distinct person. So if a supplier is receiving any input service for or on behalf of distinct person, then he is covered by ISD mechanism. Assuming I have 10 units in India, but there is not a single instance where all these units are receiving input services for or on behalf of distinct person, then I need not take registration under ISD. If I'm fulfilling criteria, then I'm legally required. Otherwise, I can get away with the requirement of ISD. Once I am registered, I will have obligation of filing GST returns and distribute ITC. Further, Section 20, subsection 2 and subsection 3 of CGST Act are also substituted, and it talks about manner and distribution of ITC, time limit of ITC, etc. Now, friends, if you refer to Circular 199, it comes out that there are two types of transactions. One, services rendered by third party. ITC in respect of such services will be distributed by way of ISD. And there is something called internally generated services that will be transferred through cross charge. So in principle, we know now what is ISD, what is cross charge, when we have to opt for ISD, when we have to opt for cross charge. But friends, believe me, as I have said earlier, managing ISD compliance will be the toughest task. Just take an example. Certain services were imported from abroad, and these services were common services. Till now, we were just paying RCM liability and claiming ITC. Now, we will have to pay RCM liability, then transfer this ITC to ISD, presuming this ITC is common ITC, and thereafter we will have to distribute and re-avail all this ITC at all the distinct person. The biggest problem of ISD is a pass-through. If any error is committed in ISD compliance, all our distinct person will suffer. Assuming I have 20 registration, and if there's a small error, all my 20 distinct person may receive so-cause notice or may have to pay back ITC. So this is the biggest problem in ISD mechanism. I will now touch base Section 13 of Finance Act 2024. This deals with special procedures to be followed by a registered person engaged in manufacturing of tobacco, pan masala, gutka, etc. Friends, you know, by virtue of Section 149, special procedures were prescribed for certain type of manufacturers. Now, this tobacco, pan masala, gutka industry is considered as a risky industry. In 50th GST Council meeting, there is an elaborate discussion on this industry. And just to ensure that this industry contribute to revenue in proper manner, there was a major change. A capacity-based taxation was introduced by virtue of notification number 4 by 2024. Earlier, it was introduced in 2023. Again, then it was removed. And again, by this notification, capacity-based taxation was introduced for gutka, pan masala, tobacco industries. As per this notification, manufacturers are required to submit details of packing machine used for filing and packing of such products. And they are required to file a form called GST SRM1. Further, to control tax evasion, there are monthly statements to be filed each month in form GST SRM2. As if this was not sufficient, even this manufacturer were required to submit a chartered engineer certificate in respect of machine installed by way of form GST SRM3. To explain legal provisions, circular number 208 was also issued. Now, friends, all these procedures were prescribed. What if these procedures are not followed? Will there be any penal consequences? So as of today, there is no penal consequences. However, with effect from 1st October, a special section 122A has been introduced. Now, this section starts with non-obstant clause. It says, notwithstanding anything contained in this act, if manufacturer fails to comply with notification number 4, there is a heavy penalty of rupees 1 lakh for every machine. 1 lakh for every machine. Further, this penalty is in addition to penalty imposed under Chapter 5. So normal penalty के ऊपर ये penalty है. In addition, Section 122A says penalty machine not so registered shall be liable for seizure and confiscation. So such machine can be confiscated. However, there is a savior. If manufacturer pays penalty within 30 days, then there will not be any seizure. So this is very punitive section. Penalty is quite high. And if you see 50th GST Council meeting, very openly government has accepted that there is a large scale evasion happening in this industry. And that's why these changes will be applicable from 1st October 2024. Now, friends, I will start with notification number 12. Now, this notification is an omnibus notification. Many rules are modified or amended, introduced through this notification. Friends, except one amendment, all the amendments were made applicable on the same date. That is from 10th July. All these amendments are applicable. Many amendments are likely to create problem unless we comply. We may face so-called notice. So let us run through some important changes in prescribed by notification number 12. Friends, explaining notification relating to amendment in rule is not very easy. If you, I am sure everybody must have seen this amendment. They just mention this tax is added, this proviso is added, this clause is removed. But when we juxtapose this amendment with original rules, we realize there are many changes. So first change is with reference to Rule 8.4a. Now, let us first understand what is Rule 8. Rule 8 speaks about application for GST registration. Rule 8.4 speaks about electronic filing. Rule 8.4a speaks about Aadhaar authentication. Section 25(6)(c) speaks about Aadhaar authentication of managing director, karta, etc. By virtue of Section 25(6)(d), government has assumed power to exempt certain type of person from Aadhaar authentication. Now, with this background, let me run through proviso added to Rule 8.4a. As you all know, government is much concerned about genuineness of taxpayers. In past, we have seen many suppliers have indulged in unethical practices and gullible recipients were made to pay tax, interest and penalty. So with this intention, government has introduced biometric authentication on pilot basis in Gujarat. Thereafter, it was introduced even in Pondicherry. Now, with this amendment, this biometric authentication has been extended to whole of the India. If you just pay attention to GST advisory, which is getting regularly published at GST portal, department is covering each and every state and they are publishing advisory for this. Now, as per this proviso, taxpayer has two choices. Either taxpayer can opt for Aadhaar authentication. If taxpayer is not opting for Aadhaar authentication, then applicant will have to go to GST Seva Kendra physically. There, their photographs will be taken, documents will be verified, and only thereafter registration will be granted. So more or less in Maharashtra earlier there was a situation for VAT registration, taxpayer were required to visit sales tax office, sign certain forms, and only thereafter registration was granted. In GST also, if applicant is not opting for Aadhaar authentication, then similar sort of process has been prescribed. I guess more or less this is a good provision. At least we can say, we can now rely on it on government registration certificate. Otherwise, in past we have seen we have relied on certificate, and now these taxpayers are not traceable, and department is raising demand on recipient. There is advisory also, and there are a good number of publications by department on this. This is applicable as of now, but yesterday we have applied in Maharashtra, and I am told as of now this Aadhaar Seva Kendra has not been set up, or they are in the process of being set up. But I'm sure in a month's time, entire country will have GST Seva Kendra. Now, sir, I'm referring to Rule 21 now. There is some small change. Now, Rule 21 deals with registration to be cancelled in certain cases. So your proper officer has power to cancel registration as per Rule 21, and there are certain situations. Now, in clause F, minor amendment has been made. If, as a taxpayer, I am filing GSTR1 with say ₹100 liability, and in 3B, I am just showing liability of ₹10. Unless I reconcile those difference, proper officer has power to cancel my registration. Since GSTR 1A has been introduced now, and it has already been made operational from yesterday. Now, a small change, GSTR 1 as well as GSTR 1A has been added. So if I am disclosing, say, liability of 100 in GSTR 1 and GSTR 1A, but my tax liability I have paid is only 80, and if I cannot reconcile, I am inviting trouble. A small change in Rule 21. Further, clause GA has been introduced. Earlier, there was changes in clause F. Now, clause GA has been introduced. So, if taxpayer is violating fourth proviso of Rule 23(1), even in that situation, registration can be cancelled. Now, what are these provisos? Third and fourth proviso. Friends, simply speaking, Rule 23(1) talks about application for revocation of cancellation. So if my registration is cancelled, I can apply for revocation. If my application is approved, my registration will be restored. But this restoration is subject to certain conditions. I am required to file all my returns along with interest. It has been observed that few taxpayers after restoration have not filed all the returns. They have filed few, and then others are pending. With this clause GA, if any of the returns are pending, and if these returns are not filed within 30 days of order of revocation, then proper officer can recancel registration. पहले cancel हुआ था, restore हुआ. If compliance is not carried out within 30 days, again it can be cancelled. Rule 21A, small change. Friends, Rule 21A talks about suspension of registration. The moment I apply for cancellation process takes time. However, immediately my number will be suspended. There is a provision called 21(2)A, where if on comparison of 3B and R1, there is a mismatch which I cannot explain, officer can suspend my registration. Now, in addition to R1, reference of GSTR 1A is also added. A small change. Rule 28. Again, a very big change. And my co-speaker, Shravanji, will take you through this amendment in great detail. I have seen his presentation and he has put his heart in explaining this provision. I will just touch base this provision. Now, friends, we know Rule 28. It is there since beginning. Rule 28.1. Thereafter, Rule 28.2 was added with effect from 26th October 2023, last year. This Rule 28 is a very specific provision. It deals with corporate guarantee given to any banking or financial institution. Now, in this Rule 28.2, two small changes have been made, or rather three changes. And all these changes are highlighted in red text. First change, word located in India has been added. Second change, per annum has been added. And third, proviso has been added. Now, what are the implications of these changes? Shravanji will take you through circular. Just to touch base, by adding word located in India, application of Rule 28.2 has been restricted. Now it will not apply to export of services or providing corporate guarantee between related persons. So assuming Infosys India is giving corporate guarantee to say Infosys UK, that situation will not be covered by Rule 28.2. Government doesn't want to tax export, and with that intention, this amendment has been brought in. Now, what is the logic of adding word per annum? Again, circular says that this per annum should be read pro rata in if situation so requires. So, for example, I have obtained a corporate guarantee from my parent company who is located in France. But this corporate guarantee was obtained, say, on 1st October 2024. Exactly for 6 months. Whether in that situation also, value of corporate guarantee will be 1%, or it will be pro rata. So by adding word per annum, it has been ensured that if corporate guarantee is obtained for a lesser period, then 1% should be read pro rata. Again, a good change. Third proviso. Friends, we have seen this proviso in Rule 28.1. Same proviso has been copied here in Rule 28.2 also. So in revenue neutral situation, whatever value is declared in invoice will be accepted as the value of such supply. Intention of government is very noble. Whether this intention will percolate to ground level, we need to see. But this is very good initiative on the part of government to add this proviso. Friends, on account of GSTR 1A, there are many changes. But all these changes are consequential. So many rules are modified. Wherever there is a reference to GSTR 1, now we should read GSTR 1 as well as GSTR 1A. And in all these rules, similar changes have been made. So I thought instead of covering all in a different slide, we read them together. As a thumb rule, you can say GSTR 1 as well as GSTR 1A. Yeah, Rule 39. So friends, we have seen by way of notification number 16, ISD mechanism has been made compulsory with effect from 1st April 2025. Now procedures for this ISD has been prescribed. Rule 39 has been substituted. However, friends, this substitution will take effect from date to be notified. So as of now, this rule 39 is not applicable. We have to continue with present rule 39, and rightly so, because when act will be introduced from 1st April, relevant rules will also be notified from same date. So as of now, this rules which we are discussing is not applicable. But friends, believe me, many changes have been brought in through these rules. And as I have told you, we need to again speak to our client and devise mechanism for ISD compliance. Now let us run through rule 39.1 in nutshell. So as per this rule, ISD credit should be distributed on a monthly basis, and ISD should file GSTR 6. We have to make sure that distribution does not exceed available ITC. Further, if credit pertains to a single unit, assuming I have 10 units, but this ISD transaction pertains to a particular unit, say Gujarat, then relevant ITC should be transferred to Gujarat only and not to other ISD units. But if such ITC belongs to say more than one unit, say out of 20 units, this ITC applies to only say 10 units, then I am required to distribute ITC to that 10 units based on turnover of such units on pro rata basis. We all are chartered accountant, we understand how to work out, so I'm not getting into how to work out pro rata. Now assume a situation where ITC is applicable to everybody, like advertisement. Now advertisement is for entire country. So all my 20 units, I will have to transfer credits. And in this situation, I will have to do pro rata on the basis of total turnover of entire country. Further, by clause F, a formula has been prescribed to work out ISD distribution mechanism. And formula is very simple. We have to first understand how much credit we have to transfer. That is C in this example, in this formula. T1 refers to turnover of specific unit. And T refers to total turnover. So in numerator, there will be turnover of specific unit. In denominator, total turnover. As applicable, one unit, maybe more than one unit, maybe all the units. And we have to multiply this with ITC. Friends, one care we have to take when we are distributing ISD, we need to distribute even amongst units who are engaged in making a wholly exempt supply. Now many times taxpayer taxes stand, वहां तो ITC मिलना नहीं है, why should I transfer? But friends, whether that unit is going to get ITC or not, that is not a relevant criteria. You have to transfer credit in terms of clause C, D, and E of Rule 39.1. Whether you are getting ITC or whether that unit is getting ITC or not is irrelevant. Further, assume one unit is not registered for any reason. Even for that unit, based on turnover of that unit, ITC should be transferred. Further, a major change, ISD unit should distribute even ineligible credits. That is happening even today. ISD is a pass through. जो भी ITC आया है ट्रांसफर करना है, irrespective of whether it is eligible or not in the hands of recipient. Recipients will determine whether it is eligible or not, but ISD will transfer. Obviously, I am required to transfer CGST, SGST, IGST separately. IGST can be transferred only as IGST, but obvious. If ISD and receiving unit are in same state, then it will be in the form of CGST, SGST. Otherwise, it will be in the form of IGST. Now, you may feel all these provisions were earlier also there. Yes, it was there. But some reshuffling has happened now because of amendment in Act. ISD is also required to issue ISD invoice. And on this invoice, we should clearly mention that this is for distribution of ITC. Assuming the situation, we have received certain common input services, and those services were transferred. ITC on there was transferred through ISD. Subsequently, we have received some credit note. Even those ITC involved on those credit notes should be transferred by way of ISD credit note. Friends, my understanding says taxpayer as of now also are not complying with ISD credit note. They are issuing ISD invoice, by and large they are issuing, but ISD credit note compliance is not up to mark, and we need to gear up for this in near future. Assuming there is some additional ITC to be transferred because of certain debit note issued by supplier on ISD unit, then even those ITC should be transferred by way of ISD debit note, and this should be disclosed in GSTR 6. Friend, clause N, though looks simple, is very cumbersome. Assuming I have availed certain ITC in past as ISD, and those ISD credits has been transferred. Subsequently, ISD unit has received credit note. Now, ITC involved in that credit note should also be transferred. It will be negative ITC transferring because credit note is a negative ITC. But this transfer should happen in the same ratio in which original ITC was transferred. So, assuming in original invoice, only 10 units were participants. In respect of reversal also, only 10 units will take the hit. It looks very logical, but compliance is a difficult task. And for this, we need to have a robust documentation. Otherwise, we may end up either losing ITC or we may face SOCOs. Friends, Rule 39(1)(a) has been inserted. A major change once again. Now we all know that RCM ITC will also have to be transferred. Now question arises, how this ITC will be first availed by ISD unit. ISD will first avail, then only they can distribute. How it will happen? So assume a situation, I have a unit in Mumbai, normal unit. I have ISD in Mumbai. So I have 2 registration in Mumbai. And I have another 15 registration as a distinct person. Now certain common services were imported on 1st April 2025. I have paid, or this common services were subject to say reverse charge. So Mumbai unit, which is a normal unit, will first pay reverse charge liability. Today also they are doing, Mumbai unit is paying reverse charge liability, no change. Thereafter, Mumbai unit will raise invoice on ISD. Generally ISD पे invoice कौन raise करता है? Third party. Generally on ISD invoice is raised by third party or vendors. In this situation, my Mumbai unit, which is normal unit, will raise invoice on ISD. ISD will avail those ITC and subsequently it will distribute to all the ISD units as applicable. So this is how RCM ITC will be transferred by virtue of Rule 39(1)(a). And that's why we are saying again, we will have to check our compliance with effect from 1st April. We may have to relook at all our compliances. This explanation has been added, but friends, this explanation remains same. It was there earlier also. So relevant period means if all units are there in existence, then previous year turnover. If all units were not there, then you will have to look at last quarter. In many situations, some units were not there even in last quarter. Then for that transaction, that unit will not get ITC. Obviously, it's a mechanism. So we cannot have actual ITC. But again, I believe this is a good provision. Otherwise, we were required to match one-to-one ITC, and that is again a cumbersome process. So all in all, ISD mechanism applicable from 1st April 2025. Biggest change, RCM ITC will be covered. We have to keep in mind, if any office is availing input services for and on behalf of other recipient, then such invoice should be taken in ISD only, and relevant ITC should be transferred as applicable. A biggest change. Another change, Rule 59(1). Friends, this rule is very common. We deal with this rule on a daily basis. GSTR1. This Rule 59 is nothing but GSTR1. In this rule, a proviso has been added. I will read out this proviso. Provided that said person may, after furnishing detail of outward supply of goods or services or both, inform GSTR1 for a tax period, but before filing return inform GSTR3B for the said tax period, at his own option, amend or furnish additional details of outward supplies of goods or service or both inform GSTR1A. And then blah, blah, blah. Electronic filing, portal, everything. Let us understand, or for the time being, let us be with this. We will vivisect this rule, very important rule. There are a few more changes in Rule 59. And friends, I was referring to this rule. Yesterday night, when I was preparing PPT, I realized that my office must have defaulted in compliance of this provision. What is it all about? So friends, since July 2017, we know what is B2CS and what is B2CL. B2C small, B2C large. And what is the threshold limit? For interstate supply, invoice up to 2.5 lakhs was B2C, B2CS. Interstate supply with invoice value more than 2.5 lakhs was B2CL. And why we are referring to B2CS or B2CL? Because for B2CL, we are required to provide invoice level details. So if my interstate value, supply value, including tax, is say 2,75,000, then I am supposed to include that invoice. I cannot submit consolidated details. But if it is 2.25 lakhs, then I'm allowed to submit a combined value. Now that limit has changed. With effect from 10th July 2024, friends, we have filed many GSTR on 11th July, and we have also filed many returns on 11th August. I don't know how many of us have complied with this provision. Many people are using Tally also, but they don't update their Tally. So Tally version 2 and 3, I'm sure, on Tally 4, unless updated, must not have taken into account this change. Henceforth, we need to be very vigilant. Earlier limit was 2.5 lakh rupees. Now it has been brought down to 1 lakh rupees. I will still not touch Rule 59(1) in detail. I will just take you through Rule 49A, 49(4)A. So 49(4)A is similar to this rule, except R1, now there is a reference to R1A. So what GSTR1 can have? What are the contents of GSTR1? So for all B2B supply, it will be invoice level details. If supply is interstate and it is B2C, but value exceeds 1 lakh, then I am required to give invoice level details. Otherwise, I can submit consolidated details, combined figure I can give. In addition, I am required to give details of debit note, credit note. So similar to R1, I am allowed to put details in R1A. Nothing, no big change. Both are at same level. Friends, we know R1 and 2B goes together. The moment R1, we filed R1, not on the very moment, but of course on 14th of same month, GSTR 2B gets auto-populated. And source of GSTR 2B is GSTR 1 of the supplier. Now, Rule 60 sub-rule 7 has been amended. Please pay attention to this clause. GSTR 2B shall consist of clause 1, clause 2, clause 2A. Details of amendment of outward supply furnished by supplier in form GSTR 1A, filed between day immediately after due date of furnishing GSTR 1 for the previous tax period to the due date of furnishing GSTR 1 for the current tax period. It means if my supplier has filed GSTR 1A, obviously my supplier can file GSTR 1A only after due date of GSTR 1. So assuming my supplier has made some amendment or disclosed some invoice, say of today is 13th August. All these amendments will be disclosed or will appear in GSTR 2B of my recipient, not in current month, but in next month. अभी जो आपको 2B कल आने वाला है GSTR 2B, उसमें वो नहीं आएगा, and rightly so, नहीं भी आना चाहिए. Otherwise, GST compliance will be a headache. Anybody will, my supplier will keep on changing their GSTR 1A, and I will be forced to file return on the very last day, maybe very last minute. So provision is very clear. Whatever changes supplier is making through GSTR 1A will not appear in current month 2B, it will appear in next month 2B. Current month 2B means a 2B which is coming immediately. So nothing will happen in tomorrow's 2B, it will remain as it is. So we have seen many provision of GSTR 1A. Let us summarize them. So what is the time limit to file GSTR 1A? After filing R1, but before filing 3B. So typically 12th for this month, 12th August to 20th August, before filing 3B. The moment I file 3B, I cannot file GSTR 1A. What is the purpose? So that I can amend or I can furnish additional details. अगर कुछ error हो गया है, I can rectify. Whether GSTR 1A is compulsory, answer is no, it is facility. If you wish to avail, you can. What if I have uploaded invoice through if invoice furnishing facility? Can I amend through GSTR 1A? Answer is no. Assuming today I am disclosing certain supply by way of GSTR 1A. Today is 13th August. When I am required to pay my outward tax on such supply, answer is very clear. In this month, 3B itself. So I am required to pay before 20th August. Though my recipient will get credit next month, I will be required to pay in 3B of July itself. So you may feel supplier as a supplier I'm required to pay tax now. My recipient is getting credit subsequently. क्या फायदा हुआ? Friends, there are many advantages. First of all, you are complying. Please appreciate you are complying. Assuming I have raised certain invoices and there was no GSTR 1A, and those invoices were not uploaded because of certain accidental omission. There was no, malafide intention on my part, and my premises was raided by DGGI. They will presume that I have not disclosed this supply because of malafide intention. Whereas I had no opportunity to amend my GSTR1 until I file my next GSTR1. So this additional facility has been granted. It's a facility. Obviously, it will save me from interest consequences because I am required to pay tax immediately. So I will be saving interest consequences. There cannot be any penal consequences. All in all, there will not be any reconciliation. So GSTR1A is a facility, and I believe it's a mechanism whereby in future government will introduce facility to amend even GSTR 3B. Friends, GSTR 4, we all know, this composition dealers are filing GSTR 4, and there was deadline of 30th April. Now the deadline has been extended to 30th June from financial year 24-25. So next year we will be filing GSTR 4 on 30th June instead of 30th April. A major change has been brought in Rule 88B. People feels that, now taxpayer will not be required to pay interest if there is balance in electronic cash ledger. In a way, you are right, but conditions are stringent. First of all, there should be sufficient balance in electronic credit ledger on or before due date. You may have filed return subsequent to due date. So instead of 20th, I have filed on 22nd August. And I had sufficient balance on 20th August in my electronic cash ledger. However, I should make sure that I should have not utilized those balance on 21st. अगर मैंने balance use कर लिया है in between, then it is not allowed. Government has drafted this rule in a way, though this drafting will be beneficial to us in some other context, which I will not deal with right now, but it is drafted in a very stringent manner. And it will handle only few situations where, for some reason 3B could not be filed. Maybe there was no password or credit was made at the last moment. Otherwise, this amendment is of no use to us. Madam, how much time I have now? Do I have 5 minutes? Shravanji, do I have 5 minutes?
Yes, sir. You can take 5 minutes.
Thank you. I will wrap up in next 5 minutes, sir.
Okay, sir.
Thank you. Rule 89. Friends, we know the Rule 89 deals with refund matters. Shravanji will deal one important issue where goods have been exported and subsequently there is upward revision in price of such goods. Now, how to claim refund in such a situation? It was the biggest challenge. Now, Rule 89 1A has been added. Circular has been prescribed. By following those mechanisms, we can avail refund even in such a situation. Further, since this rule has come on 10th July 2024, what about my past refund? So this rule says for past matters, you have 2 years time limit. So within 2 years from 10th July, you can make an application in form RFD 01 and avail refund. I believe this amendment in Rule 96 is out of abundant precaution. Now, friend, Rule 96 deals with automated refund. If I'm exporting goods or service on payment of tax, then I'm covered by Rule 96. Now, assume a situation I have exported goods on payment of IGST, and subsequently there is upward revision. Earlier, I have exported, say, rupees 1 lakh of goods, and now that value has gone up to, say, 1,20,000. How do I avail refund corresponding to value of rupees 20,000? That's a big challenge. Because in Rule 96, shipping bill is matched with our invoice, and if figures are matching, then only I will be getting refund. Otherwise, no refund. But when in this situation, when shipping bill was made, I have mentioned value of rupees 1 lakh. So even in this situation, we will have to file RFD 01. Thereby, I mean we will have to comply with Rule 89. So original supply is getting covered under Rule 96, but subsequent amendment will be covered by Rule 89. I will have to go to department and apply for refund. Rule 95B again 7J will take care. For canteen stores department, earlier procedure was manual. Now GSTN has introduced RFD 10A. Such form is required to be filed once every quarter online. Rule 96A, again a benevolent changes. So friends, if I'm exporting goods or service on LUT, I'm making a declaration that I will procure realization against such export supply within a period of 1 year. मुझे 1 साल में पैसा वापस लाना ही लाना है. What if I fail? I am required to pay tax within 15 days, on expiry of 15 days of this 1 year, or I am required to approach my jurisdictional commissioner for extension of time. This was a provision till 9 July 2024. From 10 July, what has happened? Now, I am not required to make an application to commissioner, because now second limb has been modified. First limb 15 days remains same, but now this second limit is as prescribed by FEMA. So if time limit is extended under FEMA, then that time limit will apply, and thereby I will have some additional time. Assuming under FEMA time limit is 15 months, then I can avail that additional period. I am not required to make any application to jurisdictional commissioner. So it is reduction of paperwork. Again, a very good change. Friends, we all know bells are ringing for GST tribunal, GS start. And for this, changes have been made in rules also. Rule 110 has been substituted. Now, as and when tribunal will be set up, taxpayer can file appeal in form APL 05. Manual filing is allowed only if registry allows. Cross appeal will be in form APL 06. However, even that cross appeal can be in manual form if allowed by registry. Once we file appeal, we will get provisional acknowledgement like we are getting right now. If there are any defects, registry will highlight those defects, and after rectifying those defects, we will have a final acknowledgement in form APL 02. Generally, date of provision acknowledgement will be treated as date of filing of appeal. However, in a situation where order appeal against are not uploaded on the portal, like it means a situation where orders were passed physically. In that situation, appellant is required to submit certified true copy of orders within 7 days. If we fail in this compliance, then as and when we submit certified true copy, that date will be treated as date of filing of appeal. And in this non-compliance, we may miss out 3 months deadline also. So we have to be very sure if order appeal against are not uploaded on portal, we have to make sure that we file certified true copy in registry within 7 days. Rule 111 also substituted. It talks about department appeal. Changes are almost mutatis mutandis, so I'm not handling. Almost same changes. This provision was for a taxpayer. This provision is for department appeal. Even now rules have been inserted for withdrawal of appeal. So after filing appeal before tribunal, before issuance of order, final order, anytime we can withdraw in form APL 05 or APL 07 as the case may be. However, if APL 02 has been issued, it means final acknowledgement has been given, then we are required to first make an application to tribunal to approve withdrawal. Only after approval from tribunal, we can officially withdraw our appeal. Tribunal has been allowed 15 days time in deciding this matter. But friends, rule is very clear. If we withdraw appeal, we can submit fresh appeal. However, we have to make sure that we comply deadline of 3 months, and that deadline of 3 months will apply from the date of original order. So by playing game of withdrawal, we are not allowed to extend our time limit. It is not a ploy. It's a facility again. If there are genuine error, we can withdraw and we can again file a fresh appeal. But care has to be taken to comply with 3 months time limit. Notification number 13. Now, friends, this notification number 13 has been rescinded because this notification deals with Aadhaar authentication, this biometric authentication as applicable to state of Gujarat. Now, since this authentication is applicable to all of the India, this notification has been rescinded. Notification number 14. Like last year, turnover limit for GSTR 9 is 2 crore, aggregate turnover of 2 crore, no change. Notification number 15. Again, a major change, I would say. So friends, we know if supplier is supplying goods through e-commerce operator, Amazon, Flipkart, etc., then such e-commerce operator collects TCS. Earlier, this limit was 1%. That is 0.5 CGST, 0.5 SGST, or 1% IGST. Now, that limit has been reduced. It will be 0.25 CGST, 0.25 SGST, or 0.5 IGST, as the case may be. Again, a welcome change. There will be reduction in blockage. There are a few more changes. Few forms have been introduced, but looking at paucity of time, friends, I apologize. I could not handle those changes. If time permits, we will discuss. Otherwise, I am done for the time being. Shravanji.
Yes, sir. Thank you, sir.
I suggest if you can take over, and we will have this question and answer at the end.
Sure, sir.
Should I stop my screen, sir?
Yes.
Please, sir. Over to you.
Yeah. So if you can just confirm my screen is visible.
Your screen is visible. No issue.
Is it PPT mode? Yeah. Okay. So good evening, friends. So without wasting much time, because we have a lot to cover in circulars, and I will just start with the topic. So as I will be covering the recent circulars which has come recently in the last 1 month, which has been affected now. In that, what I have done is I've just clubbed certain circulars. First will be the corporate guarantee part. Second will be certain circulars which are covered under the refund related circulars, like refund for export in upward direction, which Jignesh sir have already mentioned, and certain circulars which are relevant in respect of pre-deposit and appeal filing procedure. And there are plenty circulars which are self-explanatory in terms of the rate of notification, which we will be covering as a part of section 4. So for all practical reasons and considering the importance of the topic covered, I'll not be starting in a sequential order, but based on the importance of the practice which is relevant for us. After that, we can have a joint question and answer session taking this forward. So now, before we start on the before we start into understanding the circular, it is very important for us to understand what is corporate guarantee altogether. So here is a scenario where GC Limited, a holding company, and SC Limited is a wholly owned subsidiary company, and HD Bank is a bank. Okay. So now in this, SC Limited has applied for a loan of 100 crores to a HD Bank, but bank has told that only if the guarantee is offered by GC Limited in respect of this 100 crores, then the loan will be granted by HD Limited. So on this basis, guarantee is given by GC Limited to HD Bank for this 100 crore. If in case any default is made by SC Limited, GC Limited will be held accountable. For this particular service, there is no consideration being charged by GC Limited to SC Limited because both are being related parties. So the question which was questioned for litigation under questionable litigation was whether the provision of guarantee by GC Limited to SC Limited for this 100 crore is subject to supply and it is subject to GST or not. To answer that, and before going into the clarification which was issued, we have to understand what is the guarantee concept altogether. Guarantee in general terms is understood to be any kind of contract wherein a third party promises to undertake to pay the debt of another person. A contract of guarantee as per Contract Act is a contract to perform promise or discharge the liability of a third person in case of his default. Now, in our example, as I told you, surety is the one who is the person who gives guarantee. This is GC Limited. Principal debtor is the person in respect of whose the default of guarantee is given, which is nothing but SC Limited, the subsidiary company, and the creditor is the person who actually gives the guarantee put together. In this context, it is important to understand these terms because it is on this basis only we can actually understand the merits of who is the service provider, who is the service recipient, and on what basis this particular service is deemed taxable by the government. The similar under Contract Act, one interesting thing is there is no monetary consideration. The act of giving promise by SC Limited in our case, the act of giving promise by GC Limited in our case to the subsidiary in itself is a consideration as per the Contract Act put together. So this is the basic terms and understanding of the corporate guarantee as to how the particular transaction structures. So now what has happened, right from erstwhile regime, the particular topic of whether corporate guarantees are subject to tax or not taxable was under litigation, wherein we have just summarized one of the major landmark rulings, wherein in Olam Agro India Limited, it was held that it will be corporate guarantee will be taxed under business auxiliary services and it is not covered under banking and financial services. And in this particular judgment, they have concluded that both corporate guarantee and bank guarantee are same. Similarly, in SFE friendly judgment in Sterlite Industries Limited case, wherein it was held that the active of providing corporate guarantee shall not fall under BOFS category, interpreting that and they have explained beautifully as to how it is differentiating, how bank guarantee is different from corporate guarantee. And similarly, in latest judgment on 2023, it was again held that it is the service of corporate guarantee by a holding company to subsidiary country is subject to service tax. Given this background, under negative list, there was an entire change as to how the service was required to be taxed. The main change was there should be a requirement of a consideration for service to be taxed. In this context, a recent judgment has come into picture wherein in which was pronounced by Supreme Court in case of Edelweiss Financial Services, wherein they have mentioned in both the judgment for both positive list and negative list that the entire service of providing corporate guarantee is not taxable. So this particular judgment came in 2023, which was after implementation of GST. So under industry, they were trying to draw an analogy that this particular analogy can also be taken into consistent, they can carry forward under GST, and they need not pay GST on the service provided by holding company to subsidiary company in respect of corporate guarantee. So now under GST, as per Schedule 1, Under GST, there is no concept of consideration between related parties. And as per Schedule 1, any supply or service between related parties or distinct person is subject to GST. Without going into the shareholding activity and whether it is a service or not, they have released a circular in 2023, which is 24/16/2023, wherein they have told very clearly that the activity of providing corporate guarantee to a bank or financial institution for providing credit facility of another company where both the companies are related is a supply of service. They have discussed the fact that it will qualify as supply of service, even though the fact that there is no consideration involved. But as on that particular circular also highlighted the fact that this particular analogy shall not apply to a director's personal guarantee giving reference to an RBI circular. This circular also explained the applicability of this Rule 28 subclause 2. So now Jignesh sir has also explained the changes which has happened in Rule subclause 2. So you have to appreciate the change which has happened before that to understand why the changes have impacted now. During that change in Rule 28 subclause 2, they have mentioned that to determine the value of corporate guarantee, it shall be higher of the following: 1% of amount of such guarantee offered or actual consideration, whichever is higher. The proviso was only this much. They have not, that particular provision was that only this much. They have not mentioned per annum or the proviso of the fact that if the recipient is eligible for full ITC, then the value of invoice shall deem to be the open market value. That particular proviso also was not available during this period. So what has happened? Lot of confusion was prevailing in industry as to how to reach that 1% and whether the Rule 28 subclause 2, which started with an overriding impact, will break the ambit of working capital ITC flow if the recipient is eligible for full ITC or not. Given this background, an interesting judgment came into picture wherein they have in two of the judgments. I just summarized the facts wherein it was held that the operation of the circular should not be in effect. The Gujarat High Court, Delhi High Court, and Punjab and Haryana High Court have held very clearly that this particular circular should not be taken into consideration for an appellant to pass an order, and the particular para of valuing the corporate guarantee was stayed by the circular. So now again there was a confusion with taxpayers because of this judgment wherein they have mentioned very clearly of the fact that this circular valuation shall not taken into consideration, whether we should actually consider supply of corporate guarantee by holding company to subsidiary company as a service or merely, or it is not a supply, on what valuation has to be considered. Given this entire background, even after the circular, which is 204/16/2023, and even of the fact that Rule 28 got amended to include the valuation, there were certain questions which was required to be answered by the council, which was discussed in detail in 52nd council meeting, which we'll be discussing as such. The first question was whether corporate guarantee is a service or is it a shareholding activity. The council, by way of circular, have clarified very clearly that it is a supply of service. Okay, and then whether who is the actual service recipient? Is it the bank or is it the subsidiary company whom the corporate guarantee has been offered? Second, the applicability of that particular Rule 28 subclause 2, whether it is applicable prospective or it is applicable retrospective, and what will happen to corporate guarantees which were existing as on date of 26 October 2023, or the corporate guarantees which was already executed before 28/10/2023. Then there were also difficulties in determining the time of supply, whether it will be the date on which the corporate guarantee was signed or whether it is the date on which the loan was actually sanctioned, and what will be the value, whether it will be 1% of the entire corporate guarantee or to the extent of 1% of the loan amount sanctioned. And also the fact that because it was a non-obstant clause, whether if the recipient is eligible for full input tax credit, the benefit can be taken or not. And the question where Jignesh sir has also mentioned is 1% is per annum was introduced by way of an amendment in the rules now. It was open-ended during the time when, because the rule came that time, didn't mention that per annum. And when seeing the council minutes, we understand this reference of per annum was taken from safe harbor rules of income tax as well to make both in synchronization. Given these questions, open questions in the industry regarding this corporate guarantee, we have just summarized the circular 225/19/2024, which recently got introduced in 11th of July 2024, wherein the government has issued a detailed circular in a question and answer format and tried to cover the issues which were already forming part of it. The first question was whether the rule subclause 2 of Rule 28, which has been inserted, will apply to the corporate guarantees issued before the date of 26/10/2023 or could be applicable only in respect of new guarantees offered after 26th of October 2023. This question is of prime relevance because of the fact that there was no valuation, there is no levy before 26/10/2023, and suddenly a valuation rule came into picture from 28th of October from by way of Rule 28 subclause 2. So the question was whether this particular change is applicable prospective or retrospective, and it is also applicable for guarantees as on today or not. In this particular circular, they have clarified very clearly that the intention of introducing Rule 28 subclause 2 during in the previous period was to determine the valuation. It was taxable even before the insertion of Rule 28 subclause 2, and they have mentioned any guarantees, corporate guarantees, which is required to be taxed before 26th of October 2023, then the valuation rule prevailing in that Rule 28 is required to be followed. So let me repeat. In this circular, they have clarified that if any corporate guarantee which has been executed on or before 26th of October 2023, and the question arises whether it is taxable or not. In this circular, they have told that just because the rule got inserted in 26th of October 2023, it does not mean the guarantees executed before could not be taxable. They have clarified it will be taxable, and the rules prescribed in earlier Rule 28 will be taken into consideration for determining the value for taxing the same. Now, to answer this, I have just summarized what benefit the taxpayers can do now, because the clarification is very clear that it is taxable before 26/10/2023. So obviously the department will start taxing these corporate guarantees and try to determine the value which they believe is correct. So in this proportionate, there can be a aggressive view which can be taken challenging the circular that because the valuation rule came into picture from 26th of October 2023, the same cannot be applied retrospectively, and because there is no machinery provisions for value determination, so levy on the supply is not possible, which was held in the case of Srinivasa Shetty, the landmark judgment, wherein they have held very clearly that if there is no machinery provisions in the act to levy to charge corporate guarantee, the valuation fails. So this is one particular stand which a taxpayer can take and litigate the matter going forward. Second is, because the circular mentions the fact that Rule 28(1) existing at that point of time can be taken. So under Rule 28(1), there existed a proviso mentioning very clearly that the full value mentioned in the case where the recipient is eligible for full ITC, then the value mentioned in the invoice shall deem to be the open market value. And also in Circular 199/2011/2023, which deals with IHD and cross charge, they mentioned the fact that the value in invoice shall deem to be open market value. So can we extend the benefit of this particular Rule 28 subclause 1 before 26th of October to determine this and take a view that because the recipient is eligible for full input tax credit, assuming a scenario like that, the value in invoice shall deem to be the open market value, and the value and that can be according GST can be calculated on invoice value. The application of other rules like Rule 29 to 32 seems to be difficult and challenging because each and every corporate guarantee shall be independent to the relationship between the subsidiary company and holding company, and the valuation and getting to know open market value for a similar transaction relationship, because this is between related parties, the relationship should also match, and it becomes difficult for us to ascertain the valuation between the other rules. For one way can be taken that 10% of the cost which has been directly incurred in respect of corporate guarantee can also be taken, but the cost incurred for corporate guarantee or the guarantee is also minimal. So in this view, again, if we rely on the circular, I believe the safe view can be to take the benefit of Rule 28(1), so that we can defend, considering the fact that the same was already covered in Circular 199/11/2023 in respect of IHD and cross charge. This was the first clarification which was clarified by way of the circular issued recently. Second was, so they have given an example. They were like corporate guarantees. It is not mentioned in the circular, but we are trying to explain that corporate guarantee may be given for 100 crores, but the loan can be sanctioned by SD Bank in our example only to the extent of 25 crores. Okay, so there was a question: what will be the value on which I am required to pay GST? And because the loan was given by the bank only to the extent of 25 crores, whether the recipient is eligible to take ITC in respect of that. In this particular circular, they have clarified very clearly that the corporate guarantee is not linked to the actual disbursement of loan. That means the valuation will be to the extent of the value of corporate guarantee executed by holding company or in name of the subsidiary company, and the underlying service of corporate guarantee is not the loan disbursement. The underlying service in corporate guarantee is the risk of taking the default by a holding company in on behalf of a subsidiary company. It was also clarified very clearly that even though the loan amount has been mentioned as is partially loan amount has been sanctioned, the credit in the hands of the recipient shall not be denied merely on the fact that the services has not been received. The service by holding company to subsidiary company is taking the risk of default on behalf of a subsidiary company. So the subsidiary company shall be eligible to take full input tax credit subject to other conditions of section 16. Now there comes another question wherein the fact that because rule 28, as I told you in the earlier circular 204, the rules 28 was amended to bring the valuation rule of 1% or actual consideration, whichever is higher. But there was no provision mentioning the fact that the invoice value shall be deemed to be open market value if the recipient is eligible for full input tax credit. So now the government has rectified this particular mistake by including a proviso to Rule 28 subclause 2, similar proviso which was available in Rule 28.1, retrospectively from 26th of October 2023, mentioning very clearly as to the fact that if the recipient is eligible to take full input tax credit, then the value mentioned in invoice shall be deemed to be open market value. Now one more question arises. What is this term full input tax credit? Because this particular term is not been defined anywhere in the GST law. And how should we read this full input tax credit? Should we read via COA entity or should we read COA transaction? For example, all our clients, wherever we are doing GST advisory or compliances, they may have a minimal transactions with respect to securities which are exempted. So should we see, because a company is involved in securities supply for which ITC is reversed as per Rule 42 or 43, then the benefit of this full ITC should not be allowed, or should we see this particular full ITC as a transaction? That means for that particular transaction, if I am providing a taxable service altogether, then the recipient is eligible to take full ITC, and the benefit of ITC and benefit of valuation can be taken, and any value in the invoice value shall deemed to be open market value. So now, as Jignesh sir already mentioned, this is an important change on the fact that unnecessarily, because the ITC is already eligible in hands of the recipient, any value mentioned in the invoice value shall deemed to be open market value. This is on the premise of revenue neutrality concept. Revenue neutrality concept, which was already discussed earlier in erstwhile regime, also mentions the fact that if anyways the recipient is eligible to take input tax credit and the valuation is designed in such a way, then the value mentioned in invoice can be deemed to be open market value, because there need not be any revenue loss or implications on account of the fact that ITC is anyways taken by the credit. ITC is taken, sorry, the tax paid is already taken as ITC by the recipient in accordance with this Rule 28.2. So this was the clarification which was given. Going forward, they have dwelled upon the practical aspects as to what will happen if more than one entity is providing the corporate guarantee. So they have clarified very clearly that in respect of more than two guarantors, then they shall pay this 1% value, 1% on the value of corporate guarantee offered, proportionate to the value of guarantee offered. Assuming, for example, if there is 100 crores, out of which 20 crores is offered by one guarantor, 30 crores is offered by another guarantor, then the valuation shall apply to the extent of proportionate to the value of guarantee offered by them to the subsidiary company. Then how will reverse charge and forward charge come into picture? They have clarified clearly that if the supplier of corporate guarantee, that is in our example, the holding company is providing the service to a subsidiary company, which is located in India, and the holding company is located outside India, then reverse charge will be applicable. And then on that basis, GST is required to be paid and credit can be availed. And one more aspect they have tried to cover on this percentage term, whether this 1% is annual, yearly, annual, monthly, recurring, how is it? They have calculated they have mentioned in the circular very clearly that this particular 1% is required to be calculated annually. For example, assuming a corporate guarantee of 100 crores in our example is spreading over 5 years, then for on this 100 crore, 1% is required to be calculated. That will become a taxable value. On that, 18% is required to be paid, and that 18% is required to be paid or for the period of 5 years till the contract of guarantee is in existence. Similarly, if the contract of guarantee is less than 1 month, less than 1 year, then to the proportionate to that particular months for which the corporate guarantee is executed, or the proportionate value, the corporate guarantee, the GST is required to be paid on such corporate guarantee as such. So, as I told you, the corporate guarantee concept in itself, they tried to clarify a lot of practical aspects So there are a lot of practical challenges which we will see going forward on the issue as to whether this corporate guarantee in first place is taxable or not. So we have to wait and watch whether this is getting challenged or not going down the line. But most of the compliance aspect of earlier amendment and tweaking of the earlier amendment has been done by way of amendment in Rule 28.2 and also by way of the Circular 225, which has clarified the practical aspects as well. Now, I have clubbed two important circulars in respect of refund. One in respect of export of IGST with payment, export of goods with payment of IGST. So now, before we go into the actual circular, we have to understand how the export of goods with IGST is actually filed. So normally what is happening for any refund application, we normally go back to Rule 89. There is a formula prescribed. We apply RFD1, we license with GST authorities and we get the refunds amount. But in respect of export of goods, which involve payment of IGST upfront, the refund application is quite different, which is covered under Rule 96. In Rule 96, they have clarified that the refund, the shipping bill shall be deemed to be shall be deemed to be application for claiming refund on tax paid on export of goods and shall be deemed to be filed only when EGM and GST 3B is filed. Basically, how the operational or how the entire operation is like that. We have to file GSTR1. In GSTR1, we have to mention the details of shipping bill, IGST details. All those details we are required to mention in GSTR1. The tax portion which we are mentioning in GSTR1 is required to be paid in GSTR 3B. Only when the amount of GSTR1 is being paid in GSTR 3B, the invoice details will be transmitted to WiseGate. And if every detail, all the details of shipping bill and invoices are matching accurately, including the tax amount, invoice number, then a scroll will be generated. Based on that scroll, the refund will be automatically sanctioned by customs authorities and it will be given to it will be credited in our bank account. There is no manual intervention involved, subject to the condition that everything is validated by SB000 error, SB000 validation, and the fact that the fact that it is transmitted successfully to IceGate and all the details are proper. So now, if you see, this is the scenario wherein the taxpayer is not having much control. Only he has control with respect to the date of in shipment, value of invoice, and the IGST what is required to be paid on. The IGST value of the invoice is required to be paid on at the date of filing GSTR1 and 3B. Let us assume a scenario that there is an upward revision of goods on account of whatever reasons you may tell, on account of agreement, price escalation clause, or on account of transfer pricing adjustments which we do at year end. So now, if we are required to pay IGST for that, if the value of goods which we have exported in X period has increased on account of any reason, practical business reason, how should we pay this amount? We can pay by way of DRC, we can pay by way of GST by raising a supplementary invoice or a debit note. But is there a mechanism available in GSTN portal to claim refund of that additional IGST paid? As on today, because it is shipping bill and EGM driven, because once the goods are exported and against those goods exported, we have already claimed refund, there is no mechanism available to again generate a scroll for that particular invoice for which the refund has been given to us. In this aspect, it was difficult for a taxpayer to claim refund in respect of that additional IGST paid. So the problem was the customs was not entertaining this because they didn't have a system to operate refunds, and the GST authorities were not taking the application because there is no mechanism available, and they will always tell that all export of goods with payment of tax, customs is the proper officer. And even we tried filing the refund application other categories, giving the fact as to this upward revision, but the refund got rejected merely on the ground that this is not a valid refund application and it is required to file with the customs authorities. So now what has happened? They have introduced a rule, introduced a particular form. They have told that in respect of this incremental refund, in respect of this incremental refund, the refund is required to be filed in accordance with Rule 89, which is nothing but is RFP01. So, to just understand this better, I have given you an example that we have filed a September GSTR1 of invoices of 10, invoice value is 10,000, total value is 1 lakh, and 18,000 is IGST. Out of this IGST, we have paid in September GSTR 3B, and we are assuming that everything is error-free and the invoices have been successfully transmitted to IceGate. Now, for this particular quantity, this particular invoices, there is an incremental value of goods of 5,000 per invoice, and 50,000 is the value incremental tax which I'm required to pay, which is 9,000. So now I have paid an incremental IGST of 9,000 in the month of December 24 in GSTR 3B, and I have also disclosed the invoices in GSTR 1 of December 24. How can I claim refund of this 9,000 if I am given an option under GST law or not? Till this particular notification change in this circular, there was no option available. But now the circular has prescribed a mechanism as to how we can file the refund of this additional IGST paid on account of upward revision. First, there is a new form, refund of additional IGST paid on account of increase in price subsequent to export of goods. This form will be made available in GSTN portal until and unless this particular form is developed in GST portal. The circular has clarified that the taxpayer can file the refund under other categories following the instructions of the circular and attaching the relevant documents mentioned in the circular altogether. Second important clarification which has came on the circular from the circular is the jurisdictional officer for the purpose of sanctioning the refund shall be the jurisdictional GST officer, and it should not be the customs officer. So the daily visits to customs and customs telling to go to GST is now being clarified. It is the GST officer where all other refunds of Rule 89 are filed. This also will go into the dashboard and we can liaison with them to get it sanctioned. Interesting thing about this time limit is that they have mentioned that 2 years from the date of export of goods. So there can be a scenario right from 2017 onwards, wherein the time limit has been lapsed because 2 years from the date of export is lapsed as on today. But in this, they have given an option: 2 years from the date of introduction of this particular rule, or 2 years from the date of, in case the 2 years from the date of export is expired, then 2 years from the date of introduction of this rule shall be the valid time limit for us to file the refund application in respect of this upward remission. If the time limit is not expired in respect of this for 2 years from the date of export of goods, then 2 years from the export of goods will be the relevant period for the purpose of filing refund application. In this particular circular, they have mentioned the fact that the proper officer shall ensure that the shipping bills in respect of which the original refund was filed is given by the taxpayer, the export invoices, that means the original invoices, and the supplementary invoice is given. Is there any contract or supporting document for such incremental price revision? And then if there is any proof, we have to substantiate that this additional IGST has been paid in this particular GSTR 3B and GSTR 1. But one interesting thing which is coming up in the circular rate, for this differential IGST, for whatever reasons, the bit note or supplementary, they have told that this particular IGST is required to be paid along with interest. So now the question comes whether interest for the debit note on account of delays cost was already a subject matter of litigation, and making this condition as mandatory for us to file the refund application may not be justified, and we have to see practically as to how these particular things work. Second thing, they also mentioned the fact that because of Rule 96B getting amended to the fact that export of goods are required to be realized within FEMA timelines, the proper officer is also required to verify in respect of that incremental IGST or incremental consideration whether the amount has been received or not. And they have mentioned the fact of some CA and cost accountant certificate is required to be attached as part of relevant document for the purpose of us to file the refund in this category. There is it's recommended to go through the statement 9A and 9B, which talks about the invoice level details in respect of which the incremental refund has been claimed, and the original invoices for which the refund has already been claimed. Now, this is then a positive side of this particular circular. This circular also mentions the fact that assuming for any reason there is a downward revision of the consideration in respect of goods already exported, it is recommended the taxpayer pay that amount voluntarily along with the interest, or the tax officer during his scrutiny also verify this aspect if there is any downward revision, collect the taxes at the time of sanctioning the refund application altogether. So it is an important change, good practically lot of taxpayers were struck in respect of this refund. Now they will be eligible to claim refund, subject to the condition that the additional IGST has been paid along with interest as directed by the circular. Second procedural change, I could say, now there was a mechanism wherein they have CSD is nothing but canteen store department run in the defense department, which was notified by government under section 55 to claim refund of 50% of invoices of inputs received and which are used by their authorized operations. So earlier what was happening, there was a circular already in place. They mentioned the fact that this particular kind of refunds are required to be filed manually. Now they have attempted and they have mentioned by way of the circular and the change in the rules and notifications, this entire process has become automated, wherein they have told that new form will be prescribed, which is nothing but GST RFD 10A. And in accordance with this rule, GST RFD 10A, read with Rule 95B, the refund is required to be filed. The conditions are that the input invoices in respect of which the refund is required to be filed, which is 50% of the tax paid in respect of input, is required to be available in the GSTR 2A, and the supplier of those invoices have filed GSTR 1, and the tax in respect of the same is already been paid to the government. There are two declarations and undertaking prescribed in the circular. The fact that tax has been paid and ITC in respect of this particular invoice has not been availed by the CHD is required to be given to the jurisdictional officer for sanctioning the claim. The entire controls in respect of the fact that the amount is not exceeding the ITC availed by the taxpayer, and amount of refund is restricted to the extent of only 50% of the eligible invoices on which the tax has been paid, is now automated. That means we can the system is configured in such a way that we cannot file refund of more than the amount which is mentioned in the 3B, but we can have a downward revision subject to the conditions is not being satisfied. Rest of all the conditions are same. Only thing is the government is putting all the efforts to ensure that the refund application is online and less manual intervention is involved in the entire process of refund application. Appeals and pre-deposit. Now, one of the good circulars is it is not. This is a circular wherein practically a lot of people were facing difficulties in ground level. What was happening? As you guys are already aware that till last month, GST and GSTAC was GSTAC was not operational, and appeals were filed with the Commission on Appeals, and few were negative orders were available. So now pre-deposit amount, which is nothing but 10% in case of Commission on Appeals and 20% in case of tribunal, were required to be paid by the taxpayer just to ensure that the stay proceedings are recovery proceedings are not initiated by department, and the entire amount in respect of those demand is paid by the department only on account of payment of pre-deposit. So during this particular period, many taxpayers were not aware as to how to pay this pre-deposit of 10% or 20%. So many of them have voluntarily opted to pay this pre-deposit by using DRC 03 challan, either by mentioning voluntary and mentioning the section reference as others, and giving in remarks that pre-deposit paid for Commission on Appeals and pre-deposit paid for tribunal, just to ensure that the department is not recovering the amount from them and the proceedings are stayed. However, department will see the GST portal. In the GST portal, the electronic liability ledger will be still open. So department will not take into consideration the DRC 03, which is paid by the assessee for the purpose of this pre-deposit, and they will initiate an option of restoring the recovery proceedings. So now this is big complex. This was creating a fuss because already the tax has been paid, but it was not reflecting in the system altogether, or it was not netting off. So now what the circular has clarified that, first of all, they have mentioned in first paragraph of the circular, they have clarified as to how to make the pre-deposit payment in respect of Commission on Appeals and tribunals. They have clarified that the pre-deposit is required to be paid under services ledger, payment towards demand from the dashboard, mention the ARN number of the demand, then you will be able to get the demand detail. Against the demand detail, please fill the relevant quantum of pre-deposit required to be paid and get it adjusted. This is the right method of following and paying the amount, paying the pre-deposit amount by way of DRC 03A. Second, what is form DRC 03A? One particular opinion, one particular use of form DRC 03A is to enable the taxpayer to properly pay the pre-deposit in respect of Commission on Appeals or the appeal against the tribunal. And second objective of this particular DRC 03A is to enable the taxpayer to rectify the mistake which they have done by paying the pre-deposit by way of DRC 03. So how the system is prepared in such a way that we can file DRC 03A by giving the reference of ARN of DRC 03. If we give the reference of the DRC 03, all the details of DRC 03 will come into picture. Then we are required to give the details of reference number of demand order in that particular DRC 3A. So what will happen? Whatever amount of pre-deposit we have paid by way of DRC 03, using the reference number, will be adjusted against the demand order reference number, and it will be shown as if this particular amount has been paid by the taxpayer for pre-deposit in respect of the same. And same, it is like DRC 03 only. The application is required to be filed either by BSC or EVC. So once DRC 03 has been 3A has been filed, it will be deemed in the GSTN portal and even in the officer's dashboard that the pre-deposit 10% or 20%, depending upon the level where we are adjudicating, is already paid by the tax office by the taxpayer, and there will be no recovery proceedings initiated by the department, and the proceedings will be stayed. Second is in respect of this amount already where they have already not paid by way of DRC 03 by mistake, they can rectify their mistakes now by following the procedure under DRC 3A. The good thing is that this particular form and the mechanism and the procedure is available in the rules. It has also been notified. The GSTN is not yet operational. That means as on today, this particular procedure and the form is not operational, and we have to wait and watch when it becomes operational. And immediate things what we can do is to check with our clients in the case where they have paid pre-deposit by way of DRC 03 or by way of any other method. So we can adjust the same amount which has been already been paid by using DRC 3A. And now onwards, once this form gets notified, we can opt to pay the pre-deposit by taking the functionality and the procedure mentioned in DRC 3A. This is an portal-driven changes which has happened just to rectify the issues which has been made by the taxpayer on account of lack of notice for paying the pre-deposit amount altogether. Now, these are the major changes which has happened in respect of corporate guarantee, refunds, and pre-deposits and appellate proceedings. Now, we are trying to cover some of the circulars which are giving a clarity in respect of time of supply, rates, and whether the GST is applicable on the said service or not. These subsequent slides are very self-explanatory, which can be referred by all of you going forward. I'll be just covering in a nutshell, just to on account of time, so that we can take up question answers also. The first circular which was not covered in the earlier session was 221, which has clarified the time of supply in respect of services of construction of roads and maintenance. Roads and maintenance of national highway projects of national NHAI in hybrid mode. So the hybrid annuity mode. So what is HAM model? HAM model is basically nothing but a particular project has been allocated by NHAI. The consideration will be paid by NHAI on over a period of time. That means it will be paid partially during the time of construction and partially will be paid during the operation and maintenance charge. So now there was a confusion from trade and representations will also be reached to GST Council as to what is the time of supply in respect of such services, which such service of construction of roads under HAM model. So in this, they have clarified that this particular service is in nature of continuous supply of services, and the time of supply shall be in accordance with 13(2), read with section 31(1), which has 31 sub clause 1, sub 5, which has been reproduced as follows. If the invoice has been issued on or before specified date or completion of event, date of invoice or date of payment, whichever is earlier. If the invoice is not issued within section 31, that is 30 days from the date of completion of service, the due date of payment as per the contract or date of actual payment, whichever is earlier. So they have clarified very clearly that in case where invoice is not issued within the time limit because of this nature of this contract, the date of payment as per the milestone contract or the actual payment, whichever is earlier, shall be the time of supply in respect of the projects executed under HAM model which has been given by NHAI. Similarly, in respect of time of supply, they had the confusion what will be the time of supply in respect of spectrum allocation by government to telephone companies. In this, again, they have clarified that the time of supply shall be driven as per the continuous supply provisions, and the similar whatever time of supply mentioned in respect of continuous supply of services will be made applicable to those services as well. These were two circulars which were specific to time of supply for a specific sector. Going forward, they have clarified whether GST is applicable on certain services or not. First was in respect of GST exemption on outward supplies made by Ministry of Railways. What has happened in notification 13/2023 dated 19th of October 2023, all the outward supplies of Ministry of Railways under forward charge where all the outward supplies under forward charge to enable ITC by Indian Railways. Basically, all the services provided by Ministry of Railways were subject to forward charge. But this was causing some difficulties, practical difficulties, as a result of which what they have done, services which have been provided by Indian Railways to general public, will be exempted, such as platform tickets, retiring room, waiting room, clock room, battery operated services, etc. So they have mentioned that all the services which have been provided by Indian Railways in respect of general public will be exempted. And they have mentioned very clearly that council has been fair enough to mention that if in respect of this intervening period, whatever action taken by the taxpayer will be taken by the department. They will not take any coercive action if the particular exemption was not been availed or particular exemption was availed before the circular. There will be no action taken by the department altogether. Then there was a doubt in respect of it is applicable in case of real estate client. If there is any statutory fees which has been paid by RERA, whether the same are exempted or not. They have clarified in this particular circular that RERA is a governmental authority. Because RERA is a governmental authority, the state particulars that particular service is covered under serial number 4 of 12/17. The state service is exempted altogether. And they have also clarified in respect of incentive amount which has been paid by MEITY for using RuPay debit cards and low value UPI transactions. So I'll just give a background. What has happened in Circular 190 by 2000, 190 by 03 by 2023, they have clarified that this particular amount which has been paid by Ministry of Electronics and Information Technology as an incentive for using RuPay debit cards and low value UPI transaction is nothing but a subsidiary and are subsidies and are not subject to tax because subsidiaries are removed from the valuation rules. But now this particular subsidy received by the banks are further passed to a lot of UPI companies and further players involved in the transaction. There was a confusion whether this particular incentive which has been further passed to a lot of other players in this particular transaction will be covered under exemption or not. They have clarified very clearly that this will also be subject to the nature of transaction will be subject to which will be subsidiary and the same will not be subject to GST. So in respect of insurance, wherever reinsurance, earlier there were certain entries wherein the exemption was given only to insurance. Now, afterwards, they have included reinsurance also into that period. So there was a confusion what will happen to the intervening period. So in this circular, they have clarified that intervening period, the insurance shall also include restoration. And during that intervening period, the position taken by the taxpayer will not be questioned by the GST department, and it will be on as is where is basis. The position shall be taken into consideration. Third thing, they have clarified a very important exemption with respect to accommodation services. In this, they have clarified that if the value of accommodation service is 20,000 or less per person per month, provided the minimum stay is for 90 days. In respect of accommodation service, continuous accommodation service like hostel, if the amount is not more than 20,000 per person per month, provided the minimum stay for the period is at least 90 days, then the particular services shall be exempted. Now the question comes that the period of 90 days, how will the particular person know that the supplier knows that the recipient will be staying for 90 days? And even if he has a contract or a rental agreement for more than 90 days and the exemption is claimed, and assuming for the fact that the tenant is vacating the place before 90 days, whether the exemption claim will be questioned by GST authorities or not is something which we have to wait and watch. So similar, as I told you, the insurance and wherever reinsurance is included, the exemption is also eligible for reinsurance services, which I just wanted to cover in this particular slide. Apart from that, there are certain clarifications in respect of classification of goods, wherein they have given the benefit in respect of solar cookers, fire water sprinklers, part of poultry machines, and packed goods, labeled goods, wherein the circulars are self-explanatory, wherein the rate of tax has been mentioned, and it can be referred in the case of appropriate clients which you are serving. So I think we are good to go for question and answers. I think we have 5 to 10 minutes to take this forward, sir.
Thank you, sir. We can take up some questions.
Shravanji, I will take few questions first.
Yeah.
Unfortunately, many questions are on section 128A, section 16.5, 16.6. If you see today's session, we have not covered any of these topics, and we have been told to confine to our topics. That's why there are very good questions, but unfortunately we cannot reply them. We have to go by mandate of the institute, and we will consider only those questions which are covered by notification or circular. We have explained. Okay. Now there is a question from Mr. Madhusudhan Goyal. Considering corporate guarantees provided at corporate level and not at GST level, should the invoice for corporate guarantee be received at IS registration or can be received at registered location of the recipient? So friends, Madhusudanji, from 1st April 2025, you have no choice. You have to take it at ISD level only because this corporate guarantee will be for all the units. Correct? Till that, it is your choice. You want, since ISD is not compulsory as of now, you may choose your option. Going forward, you will have to take it at corporate ISD level and redistribute your ITC.
Yes, same here. So, but they can also cross charge if they want. That can also be.
Yeah, today they can cross charge also. There is a question from Braja Kishore Das. Apology if I am not pronouncing your name correctly, sir. As per Rule 39(1)(a), the input tax rate available for distribution in a month shall be distributed in the same month. What is the meaning of distributed in the same month? Does it mean supplier invoice raised in same month or ISD accumulated are to be distributed in the same month? Please clarify. Sir, again, there are practical challenges here. We have to take a practical view on this. If I'm availing those ITC in that month, I will have to distribute in that month. Many times we have faced a situation. See, we are filing this ISD return on 13th, and many of the small suppliers, they are also filing their if statement on 13th. So many times we have seen after we have filed a return, there were some ITC appearing in our statement. Now, these were not our transactions. And obviously, if we have not availed, we cannot distribute. So we may have to take a practical call. Ideally, there should be a time gap between filing of if statement and ISD 6 because both cannot be filed on the same day. But these are the challenges we are facing right now. You may have to take a practical call on this. Shravanji, I am deleting all these questions which are not pertaining to today's session.
Yeah. I'm actually not having access. You can take it forward, sir.
Yeah.
Do we have an option for them to open and ask questions now, ma'am?
16.
Sir?
Yeah.
Then do we have an option to ask, like open access, give access to them to ask questions now? Because most of the questions are relating to finance bill.
No, sir, I'm sorry.
Okay, fine. Just to take the benefit of.
There's a question from Mr. K.S. Sampath. Amendment in GSTR 1A to be made before filing GSTR 3B on the same period, or it can be amended in subsequent period also. Please clarify. So if I understood your query correctly, Sampath sir is asking a question whether amendment should be made before filing 3B of the same period, or it can be amended subsequently also. See, it is a facility you want to use. You can use those facility. Otherwise, you can anyway amend in GSTR 1 of next month. It is your choice, but in that situation, there might be a interest consequences in your hand because you are disclosing supply of a particular month in next month.
Yes.
Shravanji, meanwhile, there is a question, a very last question. There is a question number 19. Other than accommodation, if other services are billed in case of PG, will it be taxable?
Yes, it is. There is the exemption is for accommodation service. Now it depends, like what are the other services being provided, because normally they will be doing composite supply altogether. But if it is an independent supply altogether, there is no exemption as of now for PG and guest house. And it is only accommodation service is exempted.
(128)(a) interest.
I think the next session will answer that particular question.
Next session you can raise this query, but queries are really good. Then there are some technical issues. 128(a) 16.5. 16.5. How it will affect the business? If tax deposited after due date, but before filing 3B, whether interest is leviable, answer is very much yes. Amended rule is very clear. On the date of due date, there should be sufficient balance in your electronic cash ledger, and that balance should remain same till the time you offset. Otherwise, interest will apply. Shravanji, there is a query number 3 here. By the time I'm deleting other queries, if you can address this query. Query has been raised by CA Deepak Agarwal.
Yeah, the value of supply of service by a supplier to recipient who's related by way of providing corporate guarantee. Explanation says persons shall deem to be related persons if A times this means corporate guarantee given between related persons is taxable even if there is no corporate relationship as such. See, if I'm understanding this question properly, I understand that if there is no consideration and if the parties are related, then the valuation shall be as per 28(2), and this will be taxable even if there is no, the relationship means it should be related party or distinct person as per the definitions provided in the GST law.
My understanding says as long as there is a guarantee given, levy will be there. If parties are related, you can take benefit of proviso.
Yes,
they are not related, even that benefit will not be available.
Irrespective of they are related or not related, this particular service is seen as taxable by the government, is what we are seeing based on the circulars what has come into picture.
There is a query from Rameshwar Ji. He's saying I have inter-unit transaction of for rupees 10 crore value. And if I'm raising invoice of only 10 rupees with GST, relying on rule 28, am I correct? Sir, I'm not getting into your amount. I don't want to get prejudiced by the amount. As long as you are complying with rule 28, more particularly proviso, I don't think you will face challenge.
No challenge. Provided the recipient is eligible, that's all, full ITC.
Yes, that proviso, that full ITC is right now a problem. We may have to wait for some High Court judgment to clarify this term. GSTR 1 can be amended only there is increase in invoice, or if there is mistake and invoice value amended less, then also I'm allowed to do same in GSTR 1. Yeah, amendment means either you can increase or you can even reduce the value. It does not mean that only you are required to increase the value. Any if there is a reduction, you can carry out in GSTR 1A. Deepak Ji query we have handled. Now there is refund on capital goods. You cannot take. Please clarify.
Yes, allowed with payment of tax is only allowed, sir. So in respect of capital goods, and you're doing export of service with payment of tax, rule 9610 will come into picture, and there is no restriction of capital goods ITC which you have taken. That can be utilized for payment of IGST as well, for export of service with payment of IGST.
There is a query, rule 96A applicable with effect from
10th July.
It is from same day, 10th July. Line of distinction between ISD and cross charge, you have to refer to circular 199. If it is internally generated services, it is cross charge. If it is raised, if service is raised by third party, it will be ISD. Can GSTR 1A can be filed after filing GSTR 3B of the month? GSTR 1A, no, very clearly. The moment you file 3B, you are precluded from filing GSTR 1A.
Can we sign off today? It's already 7. But
PG accommodation already sir has replied. If there is sufficient balance in return cash, will the interest exemption apply retrospectively or prospectively? Again, Ashish Kedia ji, a very good question. We may take that this is a substantial this thing, and good chance we can argue that this amendment is retrospective. But when we are arguing on retrospectivity, it is always a gray area. But certainly we can take a stand that this provision was applicable from retrospective effect.
So there is one
What is
more
your view, sir, on this?
No, sir. One more question on 16.4. They mentioned for pre-deposit whether if we are getting a favorable order, whether we'll be eligible to get the refund of the 10% pre-deposit. It is very much eligible, sir. We have to claim under the category of appeals and orders, and the refund of pre-deposit amount what you have deposited will be credited to as refund back, sir. If you have paid using the cash balance. For credit balance, so credit balance, I believe it will be getting recredited, right? By
Yeah, it is getting recredited to your ledger.
Yeah. Okay, sir. I think we have taken all the questions, ma'am.
Thank you, sir. Thanks a lot for your valuable input and support. Can we sign off for the day?
Yeah.
Yeah, thank you, Shravanji. Thank you,
Ashok ji,
madam.
thank you, sir. Thanks a lot.
Thanks.
Ashok ji, we can sign off for the day.
Thank you, sir.